Well, the government has today launched a discussion paper into Australia Post, concluding that a daily postal delivery is simply not sustainable. Our business editor Ross Greenwood joins me now. And Ross, it seems the $1.20 stamp on a letter is not going to cut it anymore.
It's just not. Look, let's be honest here. If this was a business, the letters side of Australia Post, it would be in bankruptcy. It would be closed. And that's the sad reality of it. But the Australia Post business has a universal service obligation, similar to what Telstra has had, where it's got to cover most of the population with at least 2 deliveries a week. And it's got to be seen to be affordable, at least anyway. The problem is that Australia Post is going to collapse into loss for the first time, sort of in more than 5 years as a result of the burden of the letters business. On the other side, it's got a really burgeoning parcels business, which is highly effective and highly profitable to go forward. The problem is you can't split them aside. And until behaviour changes, and that's really what the purpose of this investigation into the future of Australia Post is really all about. But if we have a quick look at some of the key points that come out of this discussion paper today, Australians right now, homes receive 2.4 letters a week. And let's be honest, most of those letters are not from your aunts and uncles. They're generally either bills or their advertisements. Letters, the volume is down some $3 billion a year since 2007, 2008. $1.20 stamps, we say, are simply unprofitable, and the company is set for a loss this year. So even though it is government-owned, Australia Post, of course, is an operation that effectively has got to try and make a profit for the government. That's the way in which it's been set up, and unfortunately right now, because of letters, an outdated form of delivery, it's simply not doing that.
Well, what are some of the answers that this review might come up with, Ross?
Well, one is going to be the question about that universal service obligation, whether it's a situation that now the Australia Post service does not need to cover as much of Australia. More than 99% of Australians get some sort of postal delivery. So it is really going to be a situation as to whether, A, you are going to get any postal delivery at all. The second part about this is whether, indeed, in the future, it is even feasible for private groups to come in and take over the postal services and allow Australia Post to get out of more of this into the future. That's going to be the other question. And so, answers need to come up with. But, of course, while you've got, sort of an older population that still relies on the post and probably receives bills this way, of course, this is an issue where you can't simply isolate those people. That is a fundamental problem that the government is going to have to address, and as a result, it's going to be up to taxpayers to try and support some sort of communication for those people.
OK, let's look at the economy more broadly. There's new information this morning showing that higher interest rates, inflation are starting to bite an increasing number of Australian families.
Yeah, so this is coming out of S&P Global Ratings, and what it's basically showing is that serious home loan arrears are starting to rise. Now, you can start to see the volume of loans, which is the blue line here, but it's the little purple and yellow lines that are really the most important ones here, just ticking up. It's important to say that these are coming off record lows, which is a reason why banks are making so much money at the moment, because they really don't have bad and doubtful debts, and with interest rates as low as they have been. But the combination of rising interest rates, plus also the prospect of higher unemployment into the future, that's going to see those purple lines, the yellow lines, all of them tick up. And that really is one of the big issues for Australians, for the stress that they're feeling under higher prices and also higher interest rates. But then on top of that, the prospect of unemployment rising. That is the real fear of all. If you can keep the full employment or as close to full employment as you can, Australians may cope. They might not be happy with the rising prices or rising interest rates, but at least they can cut back in other areas if they need to manage. And of course, that's what most families are doing right now.
Yep, certainly seems so. And a curious piece of trivia. We often talk about the big four banks, but Australia could soon have a new fourth biggest bank.
Well, that's so true, and it went pretty close this week. I had a look a couple of days ago, and it went pretty close, and that's Macquarie Group. Now, Macquarie has quite clearly not only got consumer banking operations these days. They offer mortgages, they'll take deposits and whatever, but it's renowned for being an investment bank globally, and that's the reason why it's had enormous strength in the way in which it's gone. So this is, if you like, the pecking order, the stock market valuations of our big four banks, and you can see there that Macquarie is now just just under where the ANZ's valuation is. And on any given day, it could jump above the ANZ. But you can see it's only 10% away from where Westpac is. And so Macquarie, if you have a little look at the share price charts here over the past year, what you can see actually is that there's been an enormous rise in Macquarie Group. You can see here it's actually risen some 3% over the past year. It's now started to trade today. But if we go and have a little look at, say, for example, the ANZ by contrast, what you can tend to see here is it's down 5%. And so while that's taking place, while you've actually got ANZ shares going down and Macquarie shares going higher, ultimately and inevitably it will become our fourth or even our third largest bank.
OK, so we should just start talking about the big five then, Ross.
Exactly, that's probably what we should do.
Well, I've got a random one for you, a question without notice, if you will. Sydney Airport. Now, without notice, and they're a monopoly in Sydney, announced over Christmas that they were shutting their main car park for 6 months to do repairs. Now, quietly, this car park has been condemned, P1 at Sydney Airport. It's got concrete cancer. I've looked back at some of the reporting on this over the last 10 years. They make $100 million profit just from the car park alone. This was sold how long ago? Less than 2 years ago. The IFM paid $23.6 billion for it. Do you think they would have expected that car park would have been better maintained given it's a big cash cow?
Wouldn't you imagine that if you were buying an organisation as large as this, and I'll give you a small description of this. Somebody once told me, and they own and run one of Australia's major airports, and they basically said they don't run an airport, they actually run a car park that's attached to an airport, right? They make all their money out of the car parking and out of the retail. The landing rights and all that sort of stuff pretty much, pay the bills. The real money is in the car parking. So you would think that your due diligence might have picked this up on the way through as you were acquiring it, or indeed, if it did not, then there might be legal cases into the future raising questions as to why this was not known before the acquisition was made. It makes for a fairly interesting legal battle, I would suggest, in the future, depending on which of those scenarios plays out.
Very interesting indeed. One final question, if I will, because I'm really interested in this because it's a monopoly. Right? They have carte blanche and, that's kind of unavoidable. But who regulates this kind of thing? Because I remember talking to the airport CEO when the airport was in absolute chaos. There were apologies saying, look, sorry, it's going to get better, but this is how it is post-COVID. But, we're still not going to discount the parking for you. You're still going to pay full freight. So they weren't providing the service, but they were still charging the full fees.
And remember also, if you've got a major car park like that out of business for quite a long period of time, what does that do in terms of, A, the pressure on the other car parks around the place, and then the price of those car parks? So this is where, of course, having public transport links into airports is so vital, which is something that, say, Melbourne Airport has missed out on for years and years and years.
Yeah.
But also, really, it's about providing, a little bit like we're talking about with Australia Post, a universal service obligation to the community who use that public facility. That's one of the keys as well.
And not only that, Ross, a final here. I keep on saying that, but I love that you're just indulging me. Sydney Airport's got this thing. I've never seen it in any international airport around the world or domestic where there is no curbside pickup. You literally have to go into a car park, and the car park's not very good. Is there any control over that? Can they just do that without any kind of restriction on them? Well,
This is about the relationship that the airport has with government. It's a key piece of Australian infrastructure. It is the gateway to Australia. And so as a result of that, it depends on what is the experience that the government would expect for a person arriving for the first time in Australia. Yeah. And if it is not up to date, then it's up to government, surely, to really give some sort of direction or mandate to the airports to improve the quality of the service. That, I think, would be up to aviation ministers around the country, transport ministers as well, because, again, if your experience, and you and I go through airports, a lot of people go through airports, if you don't have a satisfactory experience, then you've got to clearly complain, and that's got to reach the ears of government.
Well, those ministers aren't asking the questions, but we are, Ross, so thank you for that.
Right, okay.
Speak to you soon.